Thank you for joining us for today's webinar, Winning Strategy into Malaysia. My name is Lu Hao Min, and I'll be your host for today. I'm also the legal manager at JC Corporate in Kuala Lumpur. Before we begin, let me briefly introduce JC Corporate. JC Corporate assists entrepreneurs to set up the right vehicle to achieve their business goals. Currently, there are 2 offices, one located in Hong Kong, and it was established since 2015, and the other one is right here at Kuala Lumpur, and it was established since January 2020. JC Corporate also has a global network of business partners in Malaysia, Singapore, Indonesia, China, US, UK, and Dubai. The Malaysia External Trade Development Cooperation, also known as MALTRADE, has been very supportive of our cross-border advisory work between Hong Kong and Malaysia. We're honored today to have Consul General of Malaysia in Hong Kong, Mr. YYC, to deliver the opening remarks. As he's unable to join us live today, it is a pre-recorded session, and the session will be played in a minute time. Today, we are delighted to have leading figures from Malaysia as our guest speakers. Our first guest speaker of the day would be Pauline Goh, the Director and Head of Investor Relations China of InvestKL, following by Donovan, Partner and Head of Employment Law and Dispute Resolution of Donovan & Ho. Next, we'd have Zhen Chao, the Tax Director of YYC, Tax Consultant Sundram Berhad. Last but not least, we have Janice Chiu, the Legal Director of JC Corporate as our panel moderator today. During the presentation, please feel free to raise any questions by typing them into the Q&A box below. We will address the questions during the panel discussion or revert in writing for any unanswered questions relevant to the topic of discussion today. Now, without further ado, let's welcome Mr. Yap.
Distinguished speakers, ladies and gentlemen, at the outset, please allow me, on behalf of the Government of Malaysia, to extend my sincere appreciation to all involved in organizing this webinar. Special thanks goes to Janice Chiu, Legal Director of JC Corporate, and her team for taking the initiative to organize this webinar titled Winning Strategy into Malaysia. I'm very honored to be invited to say a few words. Thank you as well to the speakers, Donovan & Co.'s Donovan Chia and YYC's Zhen Chao. I would like to reserve special mention for InvestKL's Pauline Goh, as InvestKL very recently achieved the milestone of attracting its 100th foreign MNC into Greater Kuala Lumpur. Last but not least, thank you to all the participants for joining us today. The COVID-19 pandemic has obliged us to look at new ways, new norms of doing our business. I am glad that the virtual avenues allow us to gather on occasions like these. Challenges give rise to opportunities, and it is heartening to know that there is consistently strong interest from Hong Kong businesses and organizations to do business with and invest in Malaysia. The convening of this webinar is indeed current, important, and timely. I hope that the participants will be able to learn much from the knowledgeable and experienced speakers today. Malaysia and Hong Kong enjoy close and friendly relations. We enjoy robust ties, both in scope and substance. Malaysia has over the years consistently been among Hong Kong's top 10 trading partners. Hong Kong also continues to be one of Malaysia's top investment sources. The ASEAN-Hong Kong Free Trade and Investment Agreements will also further enhance economic ties. These positive trends are testament to our close relations, which have benefited many Hong Kongers doing business in Malaysia. Malaysia will always be business friendly. We offer a strategic location, competitiveness, a multi-talented workforce, ease of doing business, and global supply chain advantages. There is the special China channel to accelerate FDI from China and Hong Kong. Incentives include 0% tax for 10 to 15 years for certain key new investments, such as those in the digital, economy, high-tech and high-wage industries, and the services sectors. Ladies and gentlemen, choosing Malaysia is indeed the winning strategy. With that, I would like to reiterate my appreciation to everyone involved in organizing this webinar. Thank you and good afternoon.
Thank you. We will now start today's virtual conference with Pauline from InvestKL's presentation. Pauline, please.
Hi, good afternoon, everyone. Thank you so much, JC Corporate, for organizing today's webinar. And I'm very grateful for CG, our Consul General, to talk about InvestKL also in his opening speech. So let me introduce to you who is InvestKL. And, my topic of today is bilateral trade investment performance and also foreign direct investment policies. All right. So without any further ado, let me start my session. So a few words about InvestKL. So InvestKL is a government agency under the Ministry of International Trade and Industry. So we work closely with MITI, who has office in Hong Kong. Aswani is a trade commissioner who has helped us to bring more and more Hong Kong investment into Malaysia. So you can see that we are one of the 13 agencies under the Ministry of International Trade and Industry. So InvestKL, our mandate is to attract large multinational companies to use Greater KL as their regional location. And we provide them free facilitation support, as you can see at the bottom. And what are we looking for? What kind of regional activities is important in Greater KL? We really want everyone to move up the value chain, right? Because we really want to get away, from the middle income trap. So we are promoting activities like global business services or shared service center to the center of excellence, like engineering hub, innovation hub, digital hub, or regional supply chain, distribution center, procurement center, supply chain hub, or regional headquarters, where the key decision makers, are located in KL. So we have achieved, this is our 2019 figure, we have achieved 91 MNCs at the end of 2019. And as what CG Yap has mentioned, we achieved our 100 MNCs just 2 weeks ago, right? And out of this 100 MNCs, 45 of them are actually from Europe, 24 from US, and the rest from APAC. So we definitely need more, from Asia. So this is a trade and investment trend for Malaysia and China. Yeah. So China is Malaysia's largest trading partner for the last 11 years, and Malaysia is China's 10th largest trading partner, right, for last year. And Hong Kong is very important, like what CG Yap has said, right? Hong Kong in 2019 was Malaysia's 7th largest trading partner, and Malaysia was Hong Kong's 7th largest trading partner as well. Yeah. So Hong Kong plays a very important role for Malaysia. So these are the 2019 report in terms of exports and imports. As you can see, these are the top export countries for Malaysia: China, Singapore, US, Hong Kong, Japan, and these are the top countries that we import from. This is China, Singapore, US, Japan, and Taiwan. So this is our first half figures for the year in terms of investment. So we have managed to record a total of 64.8 billion of investment. And you can see that 31% are FDI and 69% are DDI, right? So between services and also manufacturing. So Hong Kong, again, is a very important, area for us. Hong Kong is ranked number 8 out of the 10, top 10 countries in terms of FDI, which, equivalent to 0.8 billion ringgit. So these are, FDI for the manufacturing sectors, where we have top 5 countries from Singapore, Switzerland, China, US, and Thailand. And these are, our FDI for services sector, as you can see, covering real estate, utility support services. So what are the promoted, activities and sectors for Malaysia? We are definitely looking at high tech, high value, and high impact, investment, for Malaysia, right? So we are looking at high skill, high income, export oriented, R&D, capital intensive type of investment. And we have launched our Industry 4.0 back in December 2018. And the government, under the COVID situation, is even encouraging more of our companies to embrace Industry 4.0. So these are the sectors that we are looking at, in terms of like E&E, M&E, consumer tech, smart tech, e-commerce, meditech, chemical, agro-tech, renewable energy, automotive, and aerospace. And why Malaysia? Why should investors come to Malaysia, right? So Malaysia, first we have to talk about ASEAN. So ASEAN, as you can see, today is the 5th largest economy in the world. And according to a lot of economists, ASEAN will be the 4th largest economy in the world by 2030. So we have about 650 million population, and we have a very young population, and also the middle class is increasing, right, in the ASEAN countries. And you can see that Malaysia, we have very good FTA, So we have a 7th FTA and 6 regional FTAs and 74 DTAs, right? So these are all very important, for businesses. On top of that, we launched our ASEAN Economic Community back in 2015, and we are going to adopt very soon the Regional Comprehensive Economic Partnership, which is ASEAN for 5 very major countries, right? Which is China, Japan, Korea, Australia, and New Zealand. Unfortunately, India, is not ready to go into RCEP, but we hope that, when they are ready, if India comes in, then this will be the biggest FTA, I would say, in the world, which address more than half of the world's population. So all the ASEAN country is really looking forward to sign this FTA. And on top of that, we also have the CPTPP, which we just need to rectify. So we also hope that, we will rectify the CPTPP soon, which cover 11 countries. So why Malaysia? As you can see, we are ranked number 12 in the world by World Bank in terms of ease of doing business, right? And by the World Economic Forum as the 27th position in terms of competitiveness. And by the Economist Intelligence, the 2019 report on the 28th position in the world in terms of business environment ranking. And this is very important. AT Kearney has ranked Malaysia number 3rd in the world for the last 17 years, as a shared service location or GBS, Global Business Services, right? And why this, I'm going to share with you the two important factors that we have in Malaysia. That AT Kearney has ranked us as number 3rd in the world. Number 1 position is India, and number 2 position is China. So Malaysia, we have very good connectivity, yeah, as you can see here. In terms of ports, so Port Klang is the 12th busiest port in the world. And also we have Tanjung Pelepas, yeah, just next to Singapore, that is also moving up very aggressively. Currently, they are ranked 18 in the world. So these are the two important factors that I mentioned, why InvestKL and why AT Kearney are ranking us as number 3rd in the world, right? Very importantly is our multilingual, multicultural talent availability in Malaysia. So for Malaysians, every one of us can speak, at least 3 languages. Like myself, I'm 3rd generation Chinese, so I speak Bahasa Malaysia, which is our national language, very similar to Indonesian. And then English, yeah, is a compulsory language from preschool. And as a 3rd generation Chinese, I also study Chinese, like Mandarin. And on top of that, I used to work for Alcatel for 19 years. So I also speak French. So like I said that, Malaysia, we are truly multilingual, right? And we send our students, to every country in the world to study. So we have a Look East policy started more than 20 years ago. So every year we send a few hundred students to Japan and also Korea to study, and also China, Hong Kong, and Taiwan, and inclusive of Europe, like UK, France, and Germany. So our people can speak multiple language. Yeah. So we are an important actor for ASEAN. So if you come to Malaysia, you can find all the nationalities of ASEAN in Malaysia. So for all this language, it's very easy to find, whether it's Vietnamese, Thai, Filipino, is not a problem. And another important factor is cost, right? As you can see here, this is the Mercer cost of living, like a report, where you can see this is actually for the expats. Malaysia, KL, we are ranked 144th most expensive city in the world, right? Sorry to Hong Kong. Yeah, we don't want to compete with you on this space. Hong Kong is number 1 in the world, followed by Singapore, which is number 5, right? And you can see clearly in terms of office space, what's cost of the office space in KL, Singapore, and Hong Kong, and also the talent costs, yeah, and also the hotel, and also international school. So that clearly, show you that we are really, really competitive. So we have also world-class medical services and also high-quality education. So these are the investment policies that we have in Malaysia. So we allow 100%, equity ownership. We allow 100% repatriation of income, and we also allow, employment of expats. So clearly, you can see that, why we are ranked number 12 in the world by World Bank as a location for ease of doing business. So these are some of the incentives that CG Yap has also mentioned, right? We have manufacturing incentives, pioneer status and investment tax allowance. We have also the services incentive, MSC, and we also have a location-based incentive, right? For Northern Corridor, Eastern Corridor, Sabah, Sarawak, Iskandar, Tun Razak Exchange. So all this incentive, they are from 5 years to 10 years. They are, ranging from 70% tax exemption to 100% tax exemption. So this is for InvestKL. We work closely with all our partners to bring the investors to Malaysia, right, and Kuala Lumpur. So for China, we work very closely, as you can see, with HKTBC and HKPC. So in fact, we are actually helping HKPC to promote their BUD fund as well for all, of the Hong Kong companies that wish, to come to Kuala Lumpur or Malaysia, we can tap into BUD fund. Yeah, so we are fully supported by our MITI agencies in China, in Beijing, and also by our Consul General in Hong Kong and other cities in China, and also by our sister agency like MATRADE and MITI. So we work closely also with all the chambers of commerce. And then not to mention, the banks, the big fours, and also the other consulting companies. These are all our partners to help us to bring investment to Malaysia. And clearly, if you come to Malaysia, they should be able to support you as well. So these are some of the Chinese companies and Hong Kong companies that we have in Malaysia. And that's all I have to share for today. Thank you very much.
Thank you very much, Pauline, for this very informative exchange and presentation. May I now invite our next speaker, Mr. Donovan Chia of Donovan and Ho, to speak about employers' obligations and employment law in Malaysia. Donovan, please.
Thanks, Leslie. Just let me set up my screen. All right. Good afternoon, everybody. And as a start, let me express my gratitude and appreciation to Janice and her team from JC Corporate for allowing me to present to this group of attendees right now on the employment obligations and the Malaysian economic stimulus package to everyone here. It's a great pleasure to be here, and I'm happy to share what I know. All right. As an introduction, now I think we've heard a lot from the Consul General and also from Pauline earlier about why Malaysia, all right? And in terms of the workforce, it is said that we're very business friendly, and our talent, the local talent here, is of course exceptional, very diverse, and very versatile with a lot of skills. And especially when you compare in terms of the economic part, in terms of the talent cost. Now, but from an employment law landscape, now rightly or wrongly, Malaysia has established this sort of reputation as being a very pro-employee landscape. Now, what does that mean? Now, usually when you say pro-employee landscape, there's always some concerns, maybe from businesses, that this could mean it's very challenging to do business in Malaysia as an employer because there are all these different rights and obligations that you have to comply with. But what I'm here to share very briefly is that, being pro-employee, whether that's a correct definition or not, or having employment rights or labor rights is not necessarily a negative thing when it comes to business, because having a strong structure that support labor rights, employee rights and benefits is usually linked to things like social and political stability as well, and makes the country a very good source, a good target for foreign investment as well, because you can have the comfort and the certainty that rights and obligations of the workforce is being protected and compliant with international standards. Now, overall in Malaysia, the employment law is mainly governed by this act called the Employment Act, but it doesn't apply to all employees. It is mainly a protection for certain classes of workers which are considered to be more vulnerable, and these are usually referred to as the lower income workers. So for those who are earning 2,000 ringgit a month and below, or those who are engaged in manual labor, for example, unskilled work, they are protected by the Employment Act in Malaysia, which provides certain guarantees to employees in terms of their rights, such as their annual leave entitlements, sick leave entitlements, overtime, public holidays, and whatnot. For all other employees who don't fall under this, employers have the freedom and the flexibility to contract with these workers on their rights and benefits. So this is the part where we can say that Malaysia is very business friendly in terms of employee rights, because if you're engaging workers who don't fall within this category, you do have that flexibility and the freedom to negotiate on the benefits in accordance to either market practice or your own company's capabilities. Now, in terms of other legislation which protect employees, we have things like minimum wage, which is guaranteed across Malaysia, a different rate depending on whether you're in West Malaysia or East Malaysia. But for example, in West Malaysia, it's 1,200 ringgit a month. So we have legislation on minimum wage. There is also legislation on the minimum retirement age, which is 60 years old. We have also social security protection for employees, such as we call it SOCSO here, where employers and employees contribute to a fund which will cover things like employment-related injuries and also other benefits under SOCSO. For example, the employment insurance scheme, which covers employees who have been retrenched, and some of the other benefits which I will discuss later through the Malaysian Economic Stimulus Package. Okay, we also have the Employees Provident Fund, which is a form of, I will put it, forced savings or forced retirement savings, again, where employers and employees are required to contribute to the fund, which will be kept aside and able to be used by employees after they reach the retirement age, or they can withdraw early depending on certain situations. So these are just an overview of some of the benefits that employees have in Malaysia. And also there are other legislation to protect or to govern basically the termination of employees, to ensure that employees are not dismissed unfairly and are not treated harshly by employers as well. So there are all these landscapes available for employees to make sure that their rights are properly looked after. So that's where we are in terms of the employment landscape roughly in Malaysia. Okay, now recently, because of the COVID-19 pandemic, there have also been some stimulus packages which have been announced by the government in order to help businesses who may be facing some difficulties due to the current situation. And I'm just going to cover a little bit of those now, what has been provided by the government from an employment perspective. So the very first initiative, I would say, that has been implemented by the government is this thing called the Wage Subsidy Program. It is essentially a subsidy or cash subsidy that is given by the government to employers for each qualified employee that fits within the criteria. And it's meant to subsidize the headcount costs for companies, especially those who are hiring much of the lower income workers. So employees who are earning below 4,000 ringgit in this particular case, they can get a certain subsidy a month per worker. And this is actually retained by the employer to help them with their overhead and operation costs. So the subsidy rate currently is 600 ringgit per employee per month, capped to 200 employees. So if you have, let's say, 100 applicable employees, you can claim this 600 ringgit for all of those employees. If you have more than 200 ringgit, 200 employees, it's capped at 200. So it's 600 ringgit per employee per month. Now, there were previous iterations of the wage subsidy program that had different amounts depending on the size of your workforce, but this is the current rate now and the current iteration of the wage subsidy program. Okay, and it was first introduced in April and was extended for October for a further 3 months, so up to the end of this year. So those employers who subscribe since April, they can actually get a wage subsidy from April until December, which is 8 months. Okay, for those who have previously applied for it. If for those who haven't applied yet and applying for the first time this month, for example, they can receive the wage subsidy for a total of 6 months. Okay, so in reality, you could be receiving the wage subsidy from anywhere between 6 to 8 months, okay, depending on when you've applied. And it's as per the slide here. Now, what are the conditions under the wage subsidy program? It doesn't apply to every single employer. It is, like I mentioned, targeted to employers who are facing financial difficulties as a result of COVID. So there is a specific criteria here that the business which applies for the wage subsidy program must be able to show that they have a decrease in revenue by at least 30% year on year. So if you can demonstrate to the authority, which is the Social Security, SOCSO, if you can show them that you suffered a drop in revenue of 30% year to year, you qualify as an employer to apply for the wage subsidy program. Now, this also applies to both employer and employees who have been registered with Social Security since before 1st September 2020. And your employer business must be obviously a properly registered and legally registered business entity prior to 1st September 2020. So this won't apply to, let's say, someone who just incorporated a business in 1st October or 1st November, okay, and then tried to claim the wage subsidy. So it has to be for older businesses that were incorporated before 1st September 2020. Okay, but logically, when you look at the combined requirements where you have to show a decrease in revenue year on year, it has to be for a business that's at least 1 year old. I think logically, even if you have incorporated in 1st of August 2020, you won't be able to show the decrease in revenue if you weren't around for more than a year. So if you read the requirements in combination, that's what it means. Okay, and you can't apply the wage subsidy for every single employee that you have. It only applies that 600 ringgit per employee who is earning less than 4,000 ringgit a month. Okay, so if, for example, you are running a business where you are paying highly skilled workers and all your staff are earning 5,000 to 10,000 ringgit, unfortunately, you don't qualify for the wage subsidy program. But if you are a business that, let's say you're running a factory and you have some production staff and they're all earning 2,000, 3,000 ringgit a month, you are qualified per employee up to the maximum of 200 employees. So that's what it means. So again, the wage subsidy isn't an across-the-board benefit for all employers and all employees. It is subject to certain conditions like this. Okay, and it's submitted through SOCSO, and then it'll be paid monthly into the employer's account if you qualify and if it's approved. The wage subsidy also comes with a catch. If you receive the wage subsidy program, you're not allowed to retrench any employee who is earning 4,000 ringgit or less. Now, the reason of this is because the whole objective of the wage subsidy, like I mentioned, was to help you with overhead and headcount costs. So if you receive the benefit or the subsidy from the government, what they want in exchange is your commitment that you're not going to take this money and then reduce your headcount. And then you end up with employees who are now redundant or do not have employment anymore. So this is actually a form of protection for the employees by easing the financial burden on companies. It is hoped that we can also reduce the number of retrenchments that take place. So once you have this wage subsidy program, you cannot retrench employees who are earning 4,000 ringgit or less. Okay, those who are earning above the amount, if they are not receiving the wage subsidy, then of course that is subject to the usual requirements for whether you can downsize or not. You need to comply with the legal requirements, but you can do it. There's also this additional benefit given to companies, which is called the hiring incentive. Okay, if you can see from the slide here, there are certain incentives which are paid to companies if they hire certain individuals. This is basically to encourage the retention of local talent and giving them jobs and focusing on those who have recently lost their jobs through retrenchment or downsizing. Okay, so depending on the class of people that you hire, you can receive a certain amount of incentives. So if you hire somebody who is earning below 40 years, who is aged 40 years and below, you get 800 ringgit incentive, okay, for a maximum of 6 months. And for those who are hired between 40 to 60, you can get 1,000 ringgit incentive. So this is, again, the priority here is to hire those who are a little bit older, because it may be difficult for them to find jobs the older you are. So that's why they provide a higher incentive for hiring from this class of people. And also there is a benefit if you hire those who are, we consider, vulnerable individuals. So for example, those with recognized disabilities, if you choose to employ them, then you can claim this incentive. Okay, so this is one of the efforts taken by the government to promote hiring and of local talent in Malaysia. But it doesn't apply to every single employee that you've hired. Okay, and it doesn't apply to all businesses. So first of all, if you're a private employment agency, which is a person that hires people and outsource to clients, and then you charge a service fee, obviously you're not entitled to this benefit, because you're not the main employer of these employees. You're merely hiring them for outsourcing. So private employment agencies don't qualify for hiring incentive. Doesn't apply to government, public sector employees. Doesn't apply to employees who are hired after they resign. Okay, so those who resign voluntarily and then don't have a job, if you hire them, this is not part of the incentive, because again, the priority is for those who have been unemployed through things like redundancy or retrenchment. Employees who have already are receiving benefits from other schemes like the wage subsidy I mentioned and the employment retention program, you also can't claim this incentive. So there's no double claiming. Okay, and you also can't do it if you hire your spouse or family members. So this is a situation where many of the smaller businesses or the family businesses, they actually park their spouses or family members as employees of the company. So if you do that, you obviously don't qualify as a hiring incentive as well. And also it doesn't apply to rehired employees. So if it's an employee that you terminated and then you rehire them back to your company just to claim the hiring incentive, this doesn't work as well. Okay, so this is also to prevent abuse of the incentive system, where some employers may maybe agree to terminate one of their employees and then rehire them so that we can qualify for the incentive. So these are all measures to really govern the compliance with the incentive and make sure that it's not being abused. Other conditions that apply for the hiring incentive: you must follow minimum wage. So you can't hire someone and then pay them below minimum wage and then claim the incentive. You need to offer them a minimum of a 1-year contract. So you can't offer them like a 3-month contract, 6-month contract, and then claim an incentive. You can't substitute existing employees with new employees just to get the hiring incentive. So this is what I mentioned earlier. You can't fire your staff and then replace them with new people that meet the criteria so you can get the hiring incentive. And employees hired should be from those who were previously unemployed or retrenched. So they said not from the active ones. So people who are employed and then they quit and then join you, this doesn't qualify as well. So those are some of the limitations for the hiring incentive. There are also other incentives available under the economic stimulus package. There's a mobility assistance that will be provided. It is a one-off payment that workers are entitled to receive if they have to relocate for their employment. Okay, so this payment is 600 ringgit if they have to relocate more than 100 kilometers within the same region. So region here is basically West Malaysia and East Malaysia. So if you're in West Malaysia and you have to relocate 100 kilometers away, they'll pay you a 600 ringgit incentive. So this is again to encourage employees to look beyond where they are and to take up opportunities elsewhere. And if it's an inter-region situation, for example, someone in KL has to take up a job in Sabah, Sarawak, they get a higher incentive, which is 1,000 ringgit. There's also training incentives provided to encourage reskilling and upscaling of those employees who have been retrenched. So they can claim up to like a 4,000 ringgit training fee. This is, of course, only for certain trainings. It has to be approved by the relevant authorities and through the appropriate vendors, and also training allowances are received. Okay, so these are some of the examples of the incentives that are paid to encourage local talent, okay, being hired. Lastly, there's been also an update on hiring of employees. Effective 1st November, so this was a new announcement that was made, I think sometime last week. In order to prioritize local employee for job vacancies, the government has also now put a moratorium on intake of foreign workers and expatriates until 31st December 2020. And they have now, to facilitate this and to encourage companies to look at local employees, they are requiring companies to advertise job vacancies on this portal which they have set up called the My Future Jobs portal for a minimum of 30 days. And you need to submit a hiring outcome report before you apply for any employment pass for foreign workers or expatriates. Okay, so this means that if you want to hire an expatriate for your particular position, you have to comply with this requirement of advertising the role for 30 days on that platform first, see if there are local candidates who are interested to take up the role, interview them, and submit a hiring outcome report to indicate whether these local candidates were suitable or not. And if they're not suitable, you have to indicate why. And after that, then only you will go through the approval process to see if you're allowed to take on an expatriate or foreign worker. Okay, so for those, if there are certain key posts, like you feel that the local candidates will not be qualified, or you can only get a candidate from another country due to, let's say, qualifications or requirements, there's a route for exemption. So companies still can apply for exemption, but it will just have to go through that process. So again, this is just to highlight the prioritization of local employees. Pauline has mentioned earlier, we have a very good and very skilled workforce here in Malaysia. So requiring companies to look into local talent, I think this is something really positive, and it may allow you to tap into a larger pool of candidates that you may previously not have looked at. So this is one of the benefits of the My Future Jobs scheme, which they have just announced as well. And that's all for my presentation right now. And I think we can discuss later during the panel discussion if there's any questions. Thank you very much.
Thank you, Donovan, for this overview of the employment landscape in Malaysia. Now we will invite our third speaker, Mr. Zen Chow of YYC Tax Consultants, to start his presentation of taxation tips and also the tax incentives under economic stimulus packages. We'll have Zen, please.
All right, thank you, Leslie. Wow, okay, just got in time. Yeah, I know I didn't join earlier because I was having another training, which is actually still ongoing. Yeah, but I'm taking a break right now to join this webinar, and thank you so much for inviting me. Yeah, all right, so let's get things started. Let's don't delay this further. Let me just start by sharing my screen. Let me just put on my screen and. All right, can I confirm with you, Leslie, that you can see my screen? Are you able to see my screen?
Yes, yeah.
All right, thank you very much. Okay, all right, so yes, a very good afternoon to all of you. And yeah, I do know some of you are probably not from Malaysia, some of you are probably from overseas, and you probably would have not heard of YYC. So just let me quickly take 1 minute, just 1 minute of your time to quickly introduce who YYC is to all of you, because you might have heard of some bigger or larger, accounting and advisory firm, but actually YYC is pretty big as well. Now, we are actually an accounting and advisory firm in Malaysia, as well as in Singapore, right? We have a branch in Singapore as well. So we were established since 1974, and our aim is to empower entrepreneurial success. Now, to do that, we always say we uphold 3 very important brand promises here. What are these 3 brand promises? To share our expertise, right, to give the most proactive care to our clients, because we want all our clients to have the most positive experience ever. Yeah, and if you think, hey, YYC are you just a normal accounting firm out there? No, we are not, definitely not, because a normal accounting firm would only have compliance services like audit, tax, and accounting service. But we have much more than that. We have our own advisory arm, and our advisory services, ranges from strategic planning, succession planning, valuation, and even, the latest very hit thing is digital transformation or cloud transformation. We also have our own business school. That means we always hold a lot of workshops, seminars, webinars from time to time, and we serve a lot of overseas companies as well through our global business services like outsourced accounting, bookkeeping, outsourced payroll, etc. Yeah. Now, like I said, we were established since 1974. That means we are 46 years old, and we are an international firm because we have branch in Malaysia as well as in Singapore. We have more than 800 employees, serving more than 20,000 clients, and we have trained more than 120,000 participants through all our workshops and seminars, right? We have conducted more than 5,000 workshops. Now, these are just all the awards that were given to us, right, at YYC in Malaysia throughout all these years. All right, now, so our branches in Malaysia, of course, not just in Klang Valley, we also have branch in Johor, in Penang, and of course, we also have branches in Singapore. Okay, let's go straight to the point. Now, today, I know a lot of you here probably would have been thinking of, hey, should I set up a company, in Malaysia? Now, be it whether you're using the company for investment or you're using it for to run a business, you probably would be very concerned with the taxation issues, right? With the tax issues over here. And, recently the government has introduced the economic stimulus package, yeah? And also lately there's a short-term economic recovery plan. So are there any incentives right now given to Malaysian companies? Now, to be honest, there are a lot. There are really a lot. But because due to time constraint, I only have roughly 20 minutes to present this to you. I can't go in depth to each and every one of them, right? So I'll just pick something that's very important, and of course I'll touch more on the tax perspective, the tax aspect of it, right? Now, there's one incentive over here which I find very, very attractive. I have to use two varies. Why not just one vary? Two varies, very, very attractive. That is if you were to set up a new SME. Now, what is SME over here? Small, medium enterprise, a small, medium enterprise. Now, if you were to set up a new small, medium enterprise in Malaysia from this date, right, between this date, that is 1st July 2020, which has already started, until next year, 2021, 31st December, right? 31st December 2021. Between these dates, if you set up a new SME and you form it, you start your operation, what are you going to get? You are going to get tax rebate. Now, we're talking about tax rebate. We're not talking about tax deduction, yeah, right? A lot of people got confused between tax deduction and tax rebate. See, tax deduction is something given to you to reduce your income, right? The taxable income, right? That's called tax deduction. But tax rebate, it's a direct rebate against your tax payable. That means after applying the tax rate, right, you know how much tax you have to pay, you get a rebate from the tax payable. And what you're getting here is a 20,000 ringgit rebate, up to 20,000 for up to 3 years, which means you're potentially getting 60,000 worth of rebate. This is hardcore cash, 60,000. But now, how do we get this? How do we get this? Of course, first of all, it must be an SME. SME here would mean you must be registered under the Companies Act of Malaysia. Your paid up capital cannot be more than 2.5 million ringgit. Your annual sales, right? Your annual sales of the company cannot be more than 50 million ringgit per annum. And if some of you have been thinking of, hey, I can just simply set up a new company and take existing company's asset and transfer over, don't do that, because you must use separate plant, equipment, and facilities. It cannot be transferred from any existing or related companies. Now, if you fulfill all these here, you see, you will get a rebate up to 20,000, and of course, it's up to the capex and your opex, right? That means your capital expenditure and operating expenses incurred each year, it is up to that amount. So if you spend less than 20,000 a year, of course, you don't get 20,000, but most of the time you will spend more than 20,000 in a year, right? Of course, any unused rebates, let's say if you don't spend 20,000, it cannot be carried forward. Now, this seems very, very attractive, isn't it? But there is one very important point here. That is, this has been announced, it has been introduced, but the law has not been gazetted. Now, this is the issue. The law has not been gazetted, which means there would be more details, there would be more conditions to be imposed, yeah? But this is not announced yet. Therefore, I always tell my clients, now, if you already have intention to set up a new company, go ahead and set up one. If you fulfill the conditions to be announced later, right, then it's bonus for you, up to 60,000 for 3 years. But if you say, oh, I have no intention to set up yet, but if I can fulfill, I will set up, then you probably just have to keep an eye on this, right? Once the conditions are out, go ahead, set up, and you're potentially getting 60,000. Now, having said that, now this is for SME. So you would say, hey, so what is SME over here, and what is the tax rate for SME? Now, I have already explained to you earlier, right, that SME in Malaysia, under the Income Tax Act of Malaysia, small, medium enterprise means a company that fulfills two conditions. What are these two conditions? First, paid up capital not more than 2.5 million ringgit. Second, your gross business income, that means your sales line, your business income, is not more than 50 million ringgit a year. Now, actually, it's pretty easy. Most companies in Malaysia, actually fulfill these two conditions, right? They are not a big cap company, right? Their capital is not more than 2.5 million, annual sales not more than 50 million. So now, if you fulfill these two, what are the benefits that you're getting? Now, you will be getting, of course, that rebate is for newly set up company. But even if it's for an existing one, right? Or after you set up, what tax did you have to pay? You would be paying only 17%, only 17% for the first 600,000, for the first 600,000. Now, of course, Leslie would say this is still higher than Hong Kong, okay? But yes, it is still higher than Hong Kong, but still 70% is very attractive. I would say it's very attractive. For the first 600,000, only 17%, right? And anything after 600,000, it's 24. It's only 24%, right? Which means this is much, much lower than an individual non-resident tax rate, So now, why do I want to compare with a non-individual, right? Because I do know some of you investors, especially, you probably say, I want to set up a company in Malaysia for the purpose of holding investments, for the purpose of buying properties, let's say, buy some assets, do some investments, and then earn investment income. So in Malaysia, we have this term called investment holding companies, in short, IHC. So I need to talk a little bit more about IHC over here. Okay, what is IHC, investment holding companies, right? From the income tax point of view, it says if your company mainly is to hold investments, that means your activity is to hold investment. When I say mainly hold investment, that means not less than 80%, at least 80% of the income of the company derives from investment income. Investment income includes rental income, dividend income, interest income, these are called investment income. So if at least 80% of the gross income of a company comes from investment, this company would be called an investment holding company. Now, I need to bring bad news to you all. Now, why do I say bad news? Reason is because, now just like remember I was saying SME gets 17% tax rate, right? But recently, there is a change in our act. There's a change in our income tax act that says right now, if you are only an investment holding company, all right, and it's not listed, if you're not listed on the share market, not on our share market, Bursa Malaysia, right? And if you call yourself an investment holding company, which means 80% of your income comes from investment, right? This company would be deemed as no gross business income. Now, when there's no gross business income, let me go back to the conditions earlier. The conditions here says, SME is a company with gross business income. First, you must be having gross business income and not more than 50 million. So when you don't even have business income, what happened now? You don't get the 17% tax rate. You don't get the preferential tax rate. You get only 24%. You have to pay 24% for your income, for your investment income. Likewise, any company that does not have gross business income at all, right? You only have income like rental, interest, even including temporarily ceased business. You also do not have business income, and therefore you will have to pay 24%. Now, after saying this, you probably would think, hey, if that's the case, then it's not attractive anymore, because I'm supposed to be paying only 17%. But now you tell me if I use a company to earn only investment income, that means it's not worth it because I have to pay 24%. So the big question many people would ask me, many investors, many of my clients, right? They would ask me this question. They say, hey, Zen, since you tell me there's no 70% right now, is it still beneficial right now to use a company to purchase asset? Shouldn't I just use my own name, even if I'm a foreigner, even if I'm not a Malaysian, right? I'm not a Malaysian tax resident, I'm a foreigner. Shouldn't I just use my personal name to buy asset, for example, properties, right? Should I still set up a company and buy assets or properties using that company? Because people will say, hey, if I use a company, I have to maintain one, I got to pay the company secretarial fee, I got to pay the audit fee, the tax fee, and some even accounting fee. So is it really worth it? So the big question is it still beneficial right now to purchase assets under company? Let me just tell you, yes, it's still beneficial. Why? I show you a few benefits that I want to share with you, some very critical benefits. First, we look at the real property gains tax. right, perspective, RPGT. In Malaysia, we don't have capital gain tax, right? We don't have capital gain tax. That means if you buy anything that is capital in nature and you sell off your capital asset, you don't have to pay tax except for real property. Except for real property. That means if you buy a real property, you sell off your real property later and you make a gain, you have to pay tax on your gain. So let's look at the real property gains tax rate in Malaysia. Now, if you are non-Malaysian, right, you're a non-citizen, non-permanent resident, right, individual, you use your personal name, you buy a real property, and a few years later, you feel like, hey, I've made a gain, I will sell my property. Did you know how much tax you have to pay? If you sell within 5 years, within 5 years, and it means even though it is in the 5th year, within 5 years, you pay 30% on your gain. After 5 years, you pay 10%. You pay 10% on your gain. That is if you own the property with your own individual name. But look at what if you use a company incorporated in Malaysia. If you use a company incorporated in Malaysia and you buy the property, the real property, now if you sell off the real property within 3 years, yes, you still pay the same 30% on the gain. But once it goes into the 4th year, it's just 20%. Hey, that's a 10% gain from here, you know. If it's in the 5th year, 15% on the gain only. That's a 15% savings from here. And of course, during 6 years and subsequent years, that means after 5 years, right? It will be the same. It will be the same. So if you are not a super long-term investor, right? You buy for a medium term, right? Like 3 years or 4 years, right? Then you sell. It looks like using a company is so much more worth it. You save quite a lot, you know. This 10 and 15%, don't underestimate that. It will be quite a lot. Now that's just the first benefit. What about stamp duty? Let me talk about stamp duty over here. Now, I think even your own countries, I think it will be the same. Whenever you buy and sell a real property, you would have to pay stamp duty. You have to pay stamp duty on this transaction value. So have you ever wondered what's the stamp duty rate like in Malaysia when you sell a real property? Let me show you this, all right? Assuming if you sell a property of 22 million ringgit, right? 22 million ringgit, stamp duty to be paid is on progressive basis, right? First 100,000 is at 1%, the next 400,000 is at 2%, next 500,000 is at 3%, and anything after 1 million. Now this one totals up to 1 million, yeah, all right? This one totals up to 1 million. Anything after 1 million is at 4%. Now imagine if you sell a 22 million ringgit property. Did you know what's the stamp duty payable? 864,000. We're talking about 864,000. I know you will be probably saying that, hey, this is to be paid by a buyer, right? I'm a seller, I don't pay what. This buyer is going to pay the stamp duty, right? But imagine if the buyer is buying from you, will they take this into consideration? They will, because they are going to pay another 864,000 when they want to buy a property from you. If you sell a property, right? But imagine if you use a company to own a property. You can do something alternatively. You don't sell the property, you sell the company instead. I don't want to sell the property, right? I sell the company to you. If you own my company, you own the shares of my company, you own the property, right? I don't have to sell the property to you. So, but if I sell my shares to you, I also sell it at 22 million. That means you take over my whole company, you buy my shares, then you will own the company, right? And you own the company, you own the property. Stamp duty on shares, it's only 0.3%. That means a 22 million multiplied by 0.3%, it's only 66,000, you know. Your buyer only pays 66,000 to take over the company, which actually indirectly taking over the whole property. So the buyer saves how much? 798,000. 798,000. This is the savings for the buyer, and it will motivate the buyer to buy your property, right? That means the pricing, right, that they will take into account, the cost that they will take into account is now less by 798,000, right? Now, if you think, hey, 2 benefits is really good, let me show you 2 more benefits. Benefit number 3, succession planning. Now, if you own a property under individual, okay, let's say you want to do succession planning. You want to pass this down, you know, to your son, to your daughter, right, your grandson, granddaughter, I mean, to your children, right? Now, what can you do? Now you say, oh, I'll put their names. I know a few of my children now. I'll put their name into the properties and let them be co-owners, joint owners of my property. So what will happen? Let's say, assuming you want to transfer a property to 4 children of yours. 4 children. I'll just call them Alex, Ben, Catherine, and David. Right? You put 4 people's name into a property. Well, without any, if there's no specific agreement or whatsoever, usually siblings, right? You don't have any specific agreements, right? Ownership is evenly distributed, lah. 1/4 each, right? Everyone would own 1/4 of the property. Okay, so you can't actually specifically say how much you own. What's the percentage of the ownership? Now, I know sometimes you say, hey, I need to be fair, right? I don't want to be seen as I like this boy more, I like my girl less. I don't want to do that. So I'll just evenly distribute my property to them. But this is not the whole problem. The whole problem is what, let's say you transfer your property to your children, and touch wood, hey, you pass away. When you pass away, there were these 4 children of yours. I think those who always like to watch drama, especially Hong Kong dramas, you see what happened next. They will all go to court later. Why? You say, hey, this property is supposed to be mine, it's not supposed to be yours, things like that. Or some, they say, hey, I do want a property, I want to sell. But the other siblings say, no, I want to keep this. I want to receive rental income. Or I want to use it for my own. I want to stay in there. But the other siblings say, no, I don't want this. I want to sell. There will be a deadlock when you do this. But imagine if you use a company. Hey, when you use a company, the company owns the property. What you need to do is just to use your shares, distribute your shares, right? You can say, oh, Alex gets 30% of my shares, Ben gets 30%, Catherine gets 10%, David gets 30%. You can distribute your shares, right, according to whatever you want. Now, having said that, I'm not saying because I prefer boy than to girl, all right? Not because of that girl gets only 10%. Maybe because Catherine has another property already. Maybe you have another property for Catherine. So you say, okay, so Catherine, for this property, you get 10% only, right? So you see, you can distribute whatever ways you want. And the most important point is, let's say, if Catherine now says, I want to sell the property, but Alex, Ben, and David say, no, we don't want to sell, right? We want to receive rental, or say, we want to use it for our own. What can Catherine do? Very easily, because if she doesn't want a property, just sell off the shares, right? She can offer the shares to her other brothers, right? She can sell the shares to the brothers, or if the brothers doesn't want to buy, it's okay. I just sell it to a third party. I can just dispose of my 10% share if I don't like this property, right? Because I'm free to dispose of my share at any time. See, so this is the benefit when it comes to succession planning, right? When you use a company. Now, last benefit, and this is one of the most important things, when you use a company to own a property, what happened here is you have separate risk. Property owned by company is not property owned by shareholder. Remember, because property owned by company belongs to the company. You own the shares of the company, you don't own the property directly. So because these two are separate legal entity, imagine if you being sued by creditors for some reason, right? You own a property under your own name. You got sued by creditors, right? You face bankruptcy. You know what will happen to your property? The creditors can actually take your properties, and sell it off by auction because you owe them money. But when you have this property under company, they can't touch your property. I mean, they can touch your shares, but they cannot touch your property. So you can just quickly transfer your shares away, transfer your shares away to someone else. And this property is owned by the company, right? So this company is not affected at all because it's a separate legal entity from shareholders. That means company's assets are owned by the company, not by the shareholders. So you are separated, right? Your risk is separated. So these are the benefits that you have to look at when you use a company to buy properties in Malaysia or any other assets in Malaysia. Okay, so of course the tax rate is good, right? Because if you compare the tax rate of a company against tax rate of a non-resident, I tell you what, your non-resident income tax rate is 30%, but SME in Malaysia gets 17 or 24, right? It's still lower than your individual tax rate of 30%. Okay, so yes, that's all I have. Yeah, I think I'm 1 minute overrun, all right? But I do know, right, it's a really quick presentation. It probably caught you a bit, but you probably understand here and don't understand there. Don't worry, any questions at all, if you've got anything that you want to understand further, or if you need any of our services, right, whatsoever, feel free to just send us an email, right? Send us an email to enquiry@yyc.my, right? Our professional team will be more than happy to get in touch with you to understand better and see how we can help you, right? Because what we want is to really give proactive care to everyone that we know. Okay, so yes, that's all from my side. I think I'll just pass it back to Leslie. Yes, Leslie, it's all yours.
Thank you very much, Stan, for this presentation. Now we will head over to our panel discussion part, where we invite Janice, our moderator, Pauline, Donovan, and of course Zen as well, to join our panel. May we pass the time now to Janice to start the discussion.
Thank you for all the amazing speakers, especially Zan, Donovan, and Pauline. Today, I mean, that's all about Malaysia. So of course, before I start this, I would like to welcome any questions from the participants. If you have any questions, please feel free to email us in the Q&A box, and then I will try my best to ask the panelists. Yeah. So the first questions I would like to ask is three of the speaker. Yeah. So as we know that digitalization is a must now in today's business. Yeah. So from your respective area of expertise, especially Pauline, you know, you are in this investments area, and also Donovan, you are in employment industry, the legal employment industry. So what opportunities are there in Malaysia for foreigners who are looking to digitalize their business to take advantage of it? Can we start from Pauline first?
Thanks a lot, Janice. Yes, digitalization is very important. Like I said that, you know, Malaysia, we have actually launched Industry 4.0 back in December 2018. And the government is giving out a lot of, you know, goodies as well for our SMEs to embrace digitalization, like especially in the office. So this is definitely critical. Even you know, for business, under the current situation, traveling is a bit you know, difficult. So you know, like today, like we are having a virtual event, right? In normal times, probably I would be in Hong Kong, right, speaking to you. But you know, with the COVID situation, it's even more critical for us, you know, to have a digital platform, right? And like I said, you know, we welcome all the service provider also, if you are, you know, in the digital space, you know, to come to Malaysia, because definitely there is a lot of opportunities, as you know, this is a government initiative to push everyone to adopt digitalization, right? And for every individual also, like what was shared, you know, by Donovan on upskilling ourselves, right? So there are incentive for companies, you know, to upskill their staff, right? And this is definitely a key area.
How about Donovan?
Hi, yeah, I won't share too much about the incentives. I think Pauline has touched about it, about, you know, the available incentives for digitalization and all not. But in terms of employment, you know, when we talk about this digitalization and modernization, it's always in line with like we call it the fourth industrial revolution. So there's like, you know, I think surveys by the World Economic Forum that says that a lot of people who are now in school, 65% of them, or even more than that, by the time they're in the workforce, they will be doing jobs which aren't even in existence now, because things are going to revolutionize. The things that the way that we work now may not be so relevant or even exist anymore in 10 to 20 years time because of this automation and digitalization. And from the employment perspective, when we talk about that, moving forward with the times, you know, like Pauline has mentioned, with COVID, everyone is now learning to kind of not need their physical office and their physical tools anymore. You can work from home. In terms of legislation, previously there was some discussions about Employment Act being amended to allow for certain things like flexible work arrangements, you know, to allow employees to be a bit more flexible in where they work and when they work. Those legislation haven't been passed or amended yet, but I think it's indicative of the future, that now we've gone through COVID and even the government mandating everyone to work from home. I think we're going to see a lot more focus on jobs being digitalized. Of course, it could result in some redundancies, but with the upscaling and the reskilling, I think, there's a lot of opportunities available for everyone. Thank you.
Hi, Zant. Any insight to share?
All right, thanks, Janice. Okay, speaking about digitalization, I'll probably just touch on the tax perspective. Yeah, I think when it comes to digitalization, it's really all about technology. Right? It's all about technology. It's about investing into technology, be it hardware, be it software, right, or even some customized software that some companies would probably need to use, right, to get the whole company digitalized and get them automated, get the whole process automated. Now, one good news over here is that I want to bring to everyone is, you see, from the income tax point of view, from the income tax point of view, we always want to spend money and get tax deduction. We always want to say, hey, after I've spent certain money, do I get tax savings out of this? Do I actually get to pay less tax after I've spent certain sum of money, right? Now, the good news here is, you see, previously, if you spend money to buy a ready-made software, well, you get to get some tax deduction. We call that capital allowance. You get to claim some tax deduction out of that, right? But when it comes to customized software, you don't actually get deduction, right? Last time, yeah, you don't get deduction. That means if you need to do something that's customized to suit your business need, to get the whole business digitalized and automated, right? Because this is not off-the-shelf software, it's not something that people sell to you, ready-made and sold to you, you don't get any deduction. So that actually made quite a number of people not motivated or not encouraged, right, to do a customized software of their own. Until recently, if I'm not wrong, in 2018 onwards, from 2018 onwards, any customized software would all be tax deductible. That means you will get a certain tax deduction, of which what we call capital allowance, right? Whenever you incur any expenses to actually customize your own software, right? That means whenever you pay a consultation fee, if you have to pay a legal fee, you have to pay money to get certain rights to use, a certain software. These are all expenses that you can capitalize and you can claim capital allowance, which is resulting a lower tax payable. So you see, in line with the whole digitalization, initiative, right? So with you digitalize your whole company, right, by automating that whole process, you definitely need to do a lot of customization, and all this now actually saves you tax. Yeah, so this is something that is really encouraging. So I would say this is good news, right, that was announced in these few years. Yeah. So yes, back to you, Janice.
Thank you, Zant. So I heard from Pauline, I heard from Donovan, we start talking about COVID-19, which is a hot topic for this year. So when we talk about COVID, because I understand from some of my potential clients, they definitely would like to go to ASEAN. Malaysia is one of the countries they would like to explore. But due to the COVID this year, they have been, holding the project. Yeah? So this question is actually for Pauline. So as you mentioned just now, Hong Kong is ranked as number 8 out of 10 in terms of the FDI in Malaysia. So what would be your advice to our Hong Kong audience here, so to reach out a new market in ASEAN during this difficult period?
Yeah, Janice, thank you so much for the question. Like I mentioned, ASEAN is today the 5th largest economy in the world. And by 2030, it will be the 4th largest economy in the world after US, China, India. So this is really big market. Yeah. So Hong Kong government has seen this and started the Bud Fund back in the, for the ASEAN countries in August 2018, right? For every Hong Kong registered company, they can tap into 4 million Hong Kong dollar matching grant, yeah, to invest in any of the ASEAN countries. So Malaysia is definitely one of them. So that's why I say that, and why Malaysia? As I mentioned, we have the multilingual talent and our cost, competitiveness. So we really invite, all the Hong Kong companies to set up company in Malaysia to address the whole ASEAN market. Yeah. like I say again, we are located at the heart of ASEAN, and we have a very good connectivity. It's only 2 to 4 hours flight to any ASEAN country, and we have a daily flight. I mean, not now, but in the normal circumstances, there's a daily flight to any ASEAN city. So that's why we invite every one of you, tap into Pak Fund, come to Malaysia and use, Malaysia as your hub, for ASEAN.
Thanks, Pauline. I have a follow-up question because recently we have lots of travel restrictions, yeah, especially in Malaysia. And how would the Malaysian government to execute the FDI policy that you mentioned during your webinar just now? So, and also, is there anything the foreign investor need to take notes, for instance, like office closure, service suspensions, delay to expedite the process? And also, I understand that right now Malaysia is undergoing the CMCO as well. So, thank you.
So currently we are working with a few companies from Hong Kong. Some of them are looking at the manufacturing, set up their manufacturing activity. So there was one case, a success story that I have spoken to them, which is Hongrita, who set up, decided to set up their plant in Penang, December last year. And amazingly, despite the COVID-19 situation, they managed to get their plant up and running within 6 months. Yeah, so the plant today is fully operational. We are talking to a few other Hong Kong companies who wish to set up their manufacturing plant in Malaysia, right? Because of the US-China trade war, a lot of companies are looking at, having a +1 location, right? So we, pose a very good, option for people who wants to look at the +1 location. So that is on the manufacturing side, and on the services side, we are talking to some of SMEs who are looking at, ASEAN and tap into the Pak Fund to set up in KL. So we are talking to a few of them as well. So COVID will not stop them from investing. Like I say, everything is virtual. For example, for anyone who is looking at setting up something in Malaysia, if you talk to all the real estate companies, they can even arrange a virtual tour, of the new office or even a potential manufacturing site. Yeah, and for business owners that you want to come, there is still special, exemption for you to come and look at your new site. So all this can be facilitated, case by case. The only thing we cannot do is that we cannot, waive the 14 days quarantine in Malaysia. So for business owners who want to set up and who wants to look at location, this can still be facilitated, but you have to go through the 14 days quarantine.
Thank you, Pauline. So now I will pass this to Donovan, these questions, yeah? So just now you mentioned about the wage subsidy. So I believe lots of investor foreign investor or even the employers in Malaysia that would be, or in other countries that would like to invest in Malaysia, they would like to know whether this wage subsidies is actually applicable to foreign investor as well, or even foreign companies in Malaysia. So is this applicable to them?
Like what I mentioned on the slide, there are certain criteria to qualify. Generally speaking, if you are a foreign, when we say foreign investor, you must have a business in Malaysia. And if that business is incorporated in Malaysia and registered with the proper authorities from 1st September 2020, then you will qualify provided you meet the other criteria as well. So it is not limited only to, let's say, Sendirian Berhad with 100% local ownership. It is not limited in that way, but you have to meet the registration requirement of 1st September 2020. So short answer is yes, it should apply, but won't apply to, let's say, new businesses or new investors who have just decided to come into Malaysia, like let's say this month, for example.
there is this new requirements that you just mentioned about my future jobs. I would be very interested to know is, you know, right now, if let's say foreigners or they set up a company in Malaysia and they would like to, or the companies, they would like to hire foreigners to fill up the vacancy. So I know there is a minimum of 30 days prior to applying on the employment pass for foreign workers, right? So I'm just thinking, how about if let's say the company is really urgent to have these candidates to fill up, and 30 days is a bit long, I would say, because if you need to wait 30 days and then you need to apply for the working visa as well in Malaysia, so it's going to take like at least 2 to 3 months. So anything that you can advise for the audience?
Yeah, so the good news is that, this requirement, it is, I won't say that it's mandatory, you must hire all local employees. Okay, it's just a scheme to encourage or prioritize local workers. So if you have a situation where, for example, like what I mentioned earlier, you have a very key expatriate post and you need to fill that position urgently, okay, you can apply for exemption. And you just go through the process, apply for exemption, explain to the authorities why this is considered like a key post, why you can't wait 30 days. And then if it's approved, then you can bypass that requirement. So there are alternatives available or exceptions available out there. It's not a blanket. You have to do this for 30 days. So subject to you meeting the approval of the relevant decision makers, you can get the exemption.
Thanks, Donovan. So when we talk about tax, then that will be a question for you, which I think a lot of people, especially foreign investors, would like to know as well, is how can a foreign investor confirm that whether their products or their business activities or companies are eligible, okay, to apply for tax incentives that you just mentioned in your webinar?
All right, thank you. Thanks, Janice. Yeah, I think this is a very relevant question to foreign investors, especially, whenever they want to set up a new company in Malaysia, they want to know whether they're eligible for these tax incentives or not. Now, I would honestly say that yes, there are indeed some incentives. There are indeed some incentives that are reserved, right, to Malaysian-owned companies only. When I say Malaysian owns, right, there are different conditions in this, saying that some says at least 60% of the shares must be owned by Malaysians, but not all. Some of the incentives are also given to 100% owned for foreign-owned companies, because what the tax authority is looking at, right, what the ministry is looking at is really on whether these businesses, when they are being set up, are they actually benefiting Malaysians' economy? Are they actually benefiting the Malaysian economy? Are they actually benefiting the workforce in Malaysia? And if they could create, more work opportunities, to Malaysians, these opportunities, these incentives are also given to foreign companies. I've seen 100% foreign-owned companies, right, able to apply for certain incentives that get them 100% tax exempted. Yeah, and recently, in our economic stimulus package, as well as the short-term economic recovery plan, the government has also introduced a 10 years and 15 years 0% tax rate. 0% tax rate for foreign investments to come in. But of course, you have to invest at least 300 million to set up a manufacturing company in Malaysia. Then you get 0% tax, for 10 years. And if you meet the second level criteria, it's 15 years tax free. So it doesn't mean all kind of incentives are reserved to Malaysian companies only. There are some that are also open to foreign-owned companies, as long as this is a Malaysian setup business or Malaysian companies. So of course, all these information, of course, we are more than happy to share with you if you are interested, to come in, and all this information are actually also available because online as well, because these investments, incentives, they are all mostly governed by our Malaysian Investment and Development Authority, or MIDA, right? In short, MIDA, MIDA. Yeah, I think Pauline will probably know very well there from InvestKL. So yeah, so I would say Malaysia is definitely encouraging foreigners to come in, to invest, and to set up company. And yes, we do have a lot of tax incentives given to foreign-owned companies as well. Yeah.
Thank you, Zant. So lastly, I just want to ask the speaker, what is your quick advice to the foreign investor that are already in Malaysia or planning to go to Malaysia? Let's start with Donovan, please.
I think my advice would be don't hesitate to get subject matter expertise and advice from qualified consultants. I think when you're making a big move such as investing into a foreign jurisdiction, I think it's not a light piece of advice to say that you should definitely reach out to people like Janice and Zen. Make sure you have all you need to know about the regulatory requirements and even things like the financial implications of doing certain things, because it's not something that you would want to save on. I think if you don't look at investment just as your capital injection into a business, investment also has to be on things like ensuring compliance with local laws and regulations and making sure you do things right when you enter a market. So I think it's very important. Don't be afraid to reach out to people who have that subject matter expertise to make sure that you run your business in the right way. Thank you.
Pauline?
Janice, yeah, so for people who wants to come to Malaysia, they are more than happy, of course, you know, to talk to you, to talk to our trade office, to our Consul General in Hong Kong. And for those in Malaysia who are looking at, extra benefits or whatever, we are all here. They can surely reach out to us, you know, on the tax incentives available, shared by me briefly and Zen, and also on Donovan's side, you know, on the latest incentive on the, you know, HR matters that we are giving to them.
Zen?
Yeah, I would say from the tax perspective, I would say Malaysia, yeah, we may not be the lowest tax rate. You know, we may not be offering the lowest tax rate in the region, but still it's a pretty attractive, tax rate. Even 17% only, you know, for an SME, and lots of tax incentives actually given out. Like we have pioneer status that gives you 100% tax exemption. You don't even have to pay a single cent. You know, you have things like investment tax allowance, you know, for you to invest into certain plant and machinery and get additional deductions out of that. So, you know, all these kind of incentives are actually very encouraging, yeah, for foreigners to come in to invest. Yeah, even though if you say I don't intend to invest into a manufacturing or a trading company, I just want to hold use a company to hold certain assets. I think Malaysians assets like real properties are still probably amongst the lowest price in the region, which is very, very attractive at this moment. So yes, I do encourage you to take a look at you know, all the benefits that you could get, you know, be it from the tax perspective or from any other perspective. You know, do think about it, and yeah, do come in and invest in Malaysia. Yeah, that's all from my side.
Thank you all the panelists. I will pass this to Hao Mi, and she will make a closing remark. Thank you.
Thank you once again to all our distinguished guest speakers for their valuable observation and insight. And thank you very much for joining us today. We hope that it has been a fruitful afternoon for all of you, and we hope that this webinar gave you a fuller picture of Malaysia as an investment destination. All of us are just a call away. If you need any assistance to kickstart your business in Malaysia, we will do our very best to help you achieve success in Malaysia, the same success enjoyed by many foreign companies who made the right choice in choosing Malaysia. So if you have any inquiries for us or any of for the speakers, you can feel free to reach out directly. And if you'd like a copy of today's presentation slides, we can also share them with you. Please leave your email addresses in the chat box or contact us as well. And if you miss anything, don't worry, we'll be posting the on-demand recording on YouTube when it's available. So on a side note, let me briefly introduce our next upcoming event, which is going to be held on the 25th of November It's a Wednesday at 2:30 p.m. And the topic will be on Malaysia Real Estate Overview, focusing on strata titles. So please feel free to sign up. And kindly also complete the evaluation survey of today's event. As we are constantly striving to provide excellent service, we would love to hear from you and we truly appreciate your feedback. So great, thank you everyone. Please stay well and stay safe. I'll see you all in our next event and hopefully in Malaysia soon. Goodbye and have a great afternoon.
Thank you.